Good morning, friends. Welcome back to my YouTube channel. Today's topic is: are you a smart investor or a fear victim? You must be wondering why this philosophical topic. This topic is very apt for today's situation in the stock market. And I'm going to discuss on this topic with reference to wealth creation. If you look back in last 10 days, the index has fallen from 18,300 to 17,300 today when I'm talking. Almost a loss of 5.5%. If you look back at Nasdaq, in last 20 days, Nasdaq has fallen from 15,800 to 13,350 level. So almost 15.5%. It looks like a free fall. Many one of us are very scared with this fall. And therefore, the topic which I chose, I am saying is very apt for today's situation. Are you a smart investor or a fear victim? So let's get going. Before I proceed, few words here. This video is purely for learning purposes. There is no advice, and as you know, stock market is a risky bet. So before investing or committing your money to stock, either study yourself, get a good confidence, or consult an advisor. That is very essential. Long-term investor will be really rewarded if they become a smart investor. This type of fall in the market, what we call is correction. Market will never keep on moving in only one direction. It will go up, it will come down, it will correct, it will stay there for some time, oscillate in a small range, again it will go up, come down. That's the nature of the market. So therefore, each correction comes with an opportunity to an individual investor. You have to be smart enough. But the trouble with the market is, we get really very scared and we stay away from such situation. I would like to give you an analogy of life. If you look at life, every days are not alike. Sometimes you may have a time of prosperity. Sometimes you may go through some challenging situation. So it keeps on going up and down. So up and down or roller coaster ride is the basic nature of life. Let's understand that. And investment journey is a subset of life. So how we can think that investment will be having a different characteristic than the life itself? I am reminded of a couplet from Hindi poet Sri Sumitra Nandan Pant. He has very nicely described this phenomena. He has said, "Yah सांझ उषा का आंगन आलिंगन विरह मिलन का चिरहास अश्रुमय आनंद रे इस मानव जीवन का." Like every day in life, you have a day, you have a night. It alternates. So in real life, it may not really alternate, but the meaning here is that don't expect only up and up. You know, if you start going only up and up, you will lose meaning of life. Similarly, if you want to investment journey to be interesting journey, you should be ready for both, up as well as down. So don't get panicky. Stay focused, stay invested, you will do a good job. You know how this phenomenon in the stock market gets created. You must have heard about the word fear and greed. The stock market is guided by these two tendencies. When the market is going up and up, people get more and more greedy. They keep on expecting more and more return. As a result, they go on putting more and more money. Similarly, when the market is coming down, like fall like what you see in last few days, they get very fearful. They become victim of fear. And in that situation, they stay away from the market. Now, this is very interesting phenomena. Some veteran in the stock market has said that when everybody is coming to the market, I normally go away from the market. When people start going away from the market, I enter the market. And that is a very interesting case. So what I am suggesting here, it's a time not to panic. It's a time to stay cool. It's a time to look at your situation and then take proper decision. If you do that, you will do a brilliant job in your life. Now, the question comes, if that be the case, what should be our approach? I think in one of the video earlier, I had talked about asset allocation. So So asset allocation is the key to success in investing journey. Now when you talk about asset allocation, we talk about asset allocation across different segments, across different asset types. It could be equity, it could be bond, it could be gold, it could be real estate, etc., etc. Within equity itself, you can have further asset allocation in different industry segment, and within the segment you may have in stock. But it is always recommended that you should focus on maybe around max 15 to 20 stocks. Don't have more than 15 stocks in the portfolio. I have seen during my long investing career, people have 40, 50, 60, and some people have 100 stocks in the portfolio. So that's not good. You will not be able to understand. Like when you are investing in something, it is very much equivalent to buying that company in a small proportion. So before buying a company, will you not like to know about the company? And that is not possible if you have too many stocks. And theoretically, 15 stocks are good enough to give you a benefit of diversification. So stay with 15 stocks. Create an asset allocation. Asset allocation means that how much, if you have 100 rupees to invest, how much you put in these 15 stocks. That theoretical number should create, and that should act as a guideline to you. This doesn't mean that you will stick to it 100%. Be closer to that as much as possible. Now let's look at two situations. You remain engaged in the market. For doing that, it is very essential that you keep on reshuffling and from time to time keep on booking partial profit. Normally, I recommend for long-term wealth creators, it will give you a huge surprise at the end of maybe 10 years or 15 years, to invest in category A stocks like Asian Paints, Pidilite Industries, SDFC Bank, Abbott Pharma, etc., etc. There are quite a few of them, and these stocks, if you create a good proportion, in a long run, will give you in the range of 18 to 20% return. That is for sure. But now what you need here is remain in the market at time. Don't get panic and run away from the market. So do create an asset allocation. Like theoretically, look out that we allocate to different proportion in these stocks, whatever money you have. And don't forget, don't put your essential money or something which is reserved for emergency into the stock market investment at all. You should always maintain a balance of around 6 months of expenses as a sort of like reserve. That is very, very essential. Having said so, now the next thing happens is you may use maybe technical analysis to some extent in order to time, like in order to identify, can I exit out from this stock? So when you say exiting, I am not recommending to get out of this stock 100%. Maybe depending on your appetite, you can decide to sell maybe 20% of your holding or 30% of your holding. And again, when there is a reaction or correction like this in the market, add back this 20%. By doing that, you will be able to add up to your return. You may not be able to do it every time because identifying peak and bottom is very, very difficult. But well, even though you are not able to do it, still you don't lose much, and that helps you remaining engaged in the market, and you will keep track of your stocks. That is very, very essential. Normally, my recommendation for asset allocation is based on your risk profile. If you have not done your risk profile, get in touch with someone who can help you with your risk profile and then allocate your assets accordingly. Now, having said so, once you know your risk profile, it is important to create asset allocation either in equity or mutual fund. Both are same actually. See, mutual fund is aggregation of equity. So when market is falling, even NAV will fall there. When market is rising, they will rise there. But again, allocation in both of them should be done based on your appetite for risk and return. Everybody wants high return, but at no risk. Is it possible to have a free lunch? Guys, anybody asking you to come for a free lunch, be 100% careful. Think thrice before you step out for free lunch. So is the case here. So you must know your appetite and decide accordingly. Now, once you know your appetite, you have created your asset allocation, go on playing from time to time. The last thing for today, I like to mention here, don't go in a big bang approach. Invest systematically. Normally portfolio managers, like let's say if you give your money to a portfolio manager, they put all money in different stocks. That is one philosophy. Whatever asset allocation they decide, they put it there together. Normally, I suggest that start doing a little bit of timing. Although it is a fact that 100% timing cannot be done, but in my own portfolio, I do play with little bit of timing, and my experience of 40 years tells me that it gives you a little better return, and that is very, very pertinent. So do that. It's a time to invest systematically. What it means is, since market is very choppy, and I do expect this year to stay this way, there will be ups and downs, and there will be various, cycles like this, many cycles like this. So do decide your limit and add, or let's say exit in a small quantity from time to time, and that will be purely your call depending on your risk appetite and how you want to play in this market. Guys, I think I have discussed the topic today. Are you a smart investor or a fear victim? I wish that all of you become a smart investor. There could be some trouble in life at times. Even though market falls by another 10%, don't get panic about it. If you have chosen your stock properly, you will do better. So if you are not able to do yourself, you may be engaged somewhere, do consult some professional and as an advisor. Paying a little money will be always more worth than, burning your principal. So if you have liked this particular video, don't forget to subscribe, and joining my channel is going to create this platform more and more stronger, and I intend to do a regular video. Do subscribe, put the bell button also, so that you get notification whenever the new video comes. Thank you very much for your patience. Stay tuned and look forward to the next talk on the subject. Thank you so much for your time.